Hi, everyone. I'm Martin Lefebvre, Chief Investment Officer and Strategist for National Bank Investments. Welcome and thank you for tuning into our NBI podcast series. Our focus today will be on global small cap investments, its characteristics, and where it fits in portfolio construction. And to do so, we have two guests, Nadim Rizk and Thomas Horvath. Nadim is founder of Pinestone Asset Management and serves as the firm's CEO, CIO, and lead portfolio manager. He was previously the head of global equity team and the lead portfolio manager of the US, international, and global equity strategies at Fiera Capital. Mr. Rizk and the global equity team are the proud recipients of multiple awards throughout the years for their global equity fund and US equity fund. Thomas serves as Pinestone's lead portfolio manager for the global small cap strategy. And prior to being promoted, he was the lead analyst for Pinestone's large cap investment team. Mr. Horvath was a founding member of the global equity team at Fiera Capital and has held increasing responsibility for the team since 2009. Gentlemen, welcome and thank you for being with us.
Thank you, Martin. Good morning.
Yes.
Morning.
So Nadim, why don't we start with you? Could you start off with telling us a little bit about you, about your firm, and how it all started with Pinestone Asset Management.
Okay, I don't know how far back you want me to go, but I'll do it quick. I was born in Lebanon many years ago. I came to this country almost 30 years ago to attend McGill, and that's how my story started in Canada. I was very passionate about investing. I was a bit of a stock rat. I was involved in applied investments, investment club, etc. at McGill. So was Thomas. He obviously has the same sort of passionate profile. I had met through investment club at McGill back then the CEO of CN Pension, which had a style of investing that really fit in my interest, which was very Buffett-like, where you essentially owned a handful of companies that were really special on many levels, and you hold on to them as long as the business is performing.
Was that the Pascal Duquette era, or?
This was the Pascal Duquette era, exactly.
Oh,
So I was hired by Pascal and also Russ Hiscock, which became head of CN Pension eventually. Pascal went to NACA National, so there's a connection there as well. So this was my official entry into the business, and CN was a great school because it was, I think, the place to go to, especially when you're young, to learn. And a lot of that inspired us eventually at Fiera, then here, of sort of doing the same schooling, investment schooling that we do here. So we, especially on the investment side, we have a preference for hiring young, passionate graduates. So Tom in 2009 was a fresh grad from Concordia, and he had the same sort of passion and interest in the business, and we bring them in and kind of teach them how to invest in our style. Not that we're not saying there's only one style of investing, but that's sort of our style. And we find it's a lot easier when there's sort of a growth from within on the investment side. But anyhow, so that's how it started. Eventually, I'll skip a few years, but we made it to Fiera in early 2009. Funny enough, the week when S&P hit a bottom during GFC. And Fiera and us kind of launched the business, if you want. It was a bit of a, let's call it a joint venture. The business was started pretty much from scratch. We had a small amount of capital as seed and seed money to launch the business, but it was tiny. And we built the business organically at Fiera and became incredibly successful, the all modesty. Something that we're incredibly proud of because it has either not or hasn't really been done much in Canada or Quebec. So we built a massive institutional business, again, piece by piece, but we also built it with clients here, clients in the US, in Europe, in the UK, and in Asia, which is really something that we're, like I said, incredibly proud of. And the investment style, as I said, from sort of day one, the CN days hasn't changed. So we are, very long-term, concentrated. We think some of the best ideas. And we hold on to them for 10, 20, whatever years, as long as the business is performing. So that hasn't changed. And in terms of products, we also were very limited in what we do. I think we do something amazing, but we do something very small, so very narrow. The global small cap, which we'll talk about a bit later, is our a more recent product, and we haven't launched a new product in over a decade. So it's this is a very focused investment style. So that's roughly in a nutshell the story. I know you're going to ask about Pinestone, so I'll preemptively answer your question. So we obviously had a tremendous amount of success with Fiera, and we're incredibly proud of what we did together. But we still had this itch of being really a small company, small firm. We wanted to prove to ourselves that we could do it. We wanted to be our own culture, mindset, family, a little different. It was not the result of any issues we had with Fiera or any sort of disagreement. We actually still, Fiera is still a large client for us, and we still have a very strong relationship. But we, on the one hand, had this sort of, calling by the heart, if you want, and we wanted to kind of achieve our passion before it was too late. I was in my mid-40s a few years ago. On the other hand, we were a significantly large part of Fiera's business, and so we had this sort of, we were a little torn, if you want. So we wanted to achieve this without essentially impacting the organization that gave us a large chance of succeeding. So we found a way to make it work, and today we sub-advise a lot of the client assets that we have at Fiera. So Fiera went from being an employer to being a client in a nutshell. That's this transaction we did. And Pinestone was created in March of 2021, so a couple of years now, and we're extremely happy and super excited about what we've built so far and what the future holds. I'll
Yeah,
pause.
so, yeah, good answer. So you said you started at Fiera in 2009. So how big is the business nowadays at Pinestone Asset Management? How much asset under management you guys have?
So roughly we're about 45 to 46 billion USD, which is about 62 billion Canadian, depending on currency. Roughly speaking, about 35 billion US is still the legacy business, let's call it that, which we have with Fiera. And about 10 billion is new business that we've raised at Pinestone, which is which is really amazing. It's actually beyond even our most optimistic forecast. So the business is doing really well. We're about 30 employees overall.
Wow, that's quite an achievement. Congratulations on all of that.
Thank you.
Nadim, you've already touched upon your process, but what makes you really different, and how much of that has been a catalyst to your outperformance throughout the past decade or so?
I think we're quite different from a lot of other firms, and I think that is a large part of the success we had in the past. I think the success was due to obviously a very specific vision. So we had a very specific vision in how we want to invest, and we obviously stuck to it in all kinds of markets, whether it was easy, strong markets, or tough 2008, 2009, or COVID, etc. I think that was a big part of the success. I think we have an amazing team and we do amazing work. Tom being, key part of the team. That's a big part of the success. It is unique in the sense that firms that invest in a very small subset of the market and hold positions for 10 to 25 years are very rare. As you know, and it has changed a little bit in the last 20 years. So 20 years ago when we started, concentration was actually a big negative for us. Selling into the US market was very hard. Clients that would invest in a global fund that had 20, 30, 40 positions were few and far between. But that's because active firms had 200-300 positions, and the very low cost passive didn't really exist. ETFs didn't really exist. So that has improved a little bit. So today there's more and more concentration, and there's also more and more acceptance for concentration. But buy and hold still in our industry is 1, 2, 3 years. That's typically if you're holding something for a couple of years, you consider yourself as a long-term investor. And again, like I said, we're not picking anybody. There's a million ways to skin a cat, but for us, it's really we think it is in the best interest of investors and us, since we're heavily invested in the strategies as well, is to just hold on to a business that's compounding value over extended periods. And that is, in my opinion, still fairly unique in today's world.
Okay, let's talk a little bit about the small cap strategy that we just launched with you guys. Obviously, you're famous for managing large cap, whether in the U.S. or in global equities. So, what's your take on this new fund or your approach to managing small caps?
Yeah. So before I hand it over to Thomas with some of the comments, just keep in mind a few things. Like I said, so we're not in the business of launching products for the sake of launching products. We want to be an investment firm before, rather than be a product firm. When we launch a new product, we have two conditions that are necessary for us to be promoting a product for investors and potential investors. One is we have to be convinced that we have an edge or an advantage in managing such a product. So, like I mentioned on the large cap, we have to ourselves be convinced that we are actually really good or better than average at running such a product, which is, I think, the case here. It's not the case for most products out there, but it is the case here. And the other condition is we have to believe that this product actually is in the best interest of clients and adds value to clients. And that's why typically we are willing to significantly co-invest alongside our clients in the same vehicles and in the same funds. I think global small cap is something that obviously checks these two items. It's also something that we have been looking at for years, actually since the Fiera days. We've over time, uh, multiple times considered launching that. It didn't work for different reasons at Fiera, the timing, etc. It was always something. So we always kind of postponed it and pushed it. And Tom and I spoke about it a few times, and I told him, be patient. We'll do it one day. And luckily, he is patient. That's why he likes working with us. Eventually, we felt that this was the right time. At Pinestone, obviously, we had a lot more interest in such a product. But we wanted to make sure that the firm was properly set up, that back office compliance, operations, IT, everything was really functioning really well before we considered. So now that we've been in business for a few years, we felt comfortable. And then the bank was also interested in seeding the strategy at the same time. So all the pieces, sort of all the stars were aligned, and we felt it was the right time. And I would add something personal. I would say that I think Thomas is also more than ready, because again, you need all these pieces to be perfect to launch a product that's really in the best interest of clients versus sort of launching it quickly. It works. If it doesn't work, we shut it down. We fire everybody. We move on. We take a lot more time at deciding on something because we like to do it well. One final point is also maybe quick to mention that the way we also did things is different from other firms typically. So what we did here is that we worked on the product quietly. We did all the research, all the setup, all the coverage before we launched the product, which is also something not typically done. Most firms would actually launch a product, get the money, then do the work, which is understandable because it is costly in terms of time and money for a firm to actually do the work before the client's money is in. So in this case, we started almost a year ago, kind of behind the scenes, quietly doing all the work. And so the day we launched, we were very comfortable telling clients that you are buying into a product that has full coverage and full confidence from our side that we know what we're investing in.
All right. So, Thomas, turning it over to you. As the lead PM on the global small cap strategy, can you tell the advisors on the line what are basically the pros and cons of global small stocks, whether compared to large cap or let's say US small caps?
Sure. So there's a lot of puts and takes that you can have when looking at a product like the global small cap. So in terms of the advantages, one of the biggest ones is that a lot of these companies are simply less followed and they're earlier on in their story. So there's a lot more potential if you understand how to identify high quality businesses. You're able to find these companies earlier and then you're able to own them for even longer and make a lot of return with them. In addition, since they are earlier in their life cycle, often these companies can grow at a very nice pace for a long period of time because often what we've noticed is that these smaller companies, they're operating within a specific niche in the market and they have a very strong positioning. When you look at larger companies, often they're more diversified and they're more mature in some of these end markets. And then the last point I would highlight is that the market for global small cap is very large in terms of the breadth of companies that are out there. If you look at the index alone, there's over 4,000 companies to choose from, and the largest company in the index is probably 10 or 20 basis points. So you can be very active and have an active strategy and identify a lot of these very strong companies. Now, on the other side, there's a few things that you have to manage when you're running a global small cap fund, and the big one is definitely liquidity, because you're owning these smaller businesses, so they're not as big in nature, and then often a lot of them are founder owned or founder led, so they have sizable positions still in the company, which we view as a positive. But then on the ownership side, if you want to own a big portion, then there's some constraints that you have to deal with.
What kind of
Um,
size are we talking about? We know like a small cap US stock is bigger than a big cap in Canada. So what kind of size are we talking about?
yeah, so on the global level, we would start looking at anything over a few hundred million, over 500 million, and then as we get to the larger scale, we would probably start looking to not own these companies slowly after it crosses 10 billion.
Okay.
And then our main field of play would be anywhere in between because we feel that these are businesses that are mature enough in their operations, in their business profiles that we have confidence in them, and they're not too large where they start becoming out of the scope of what investors that would invest in the fund would be looking for.
Yeah, and keep in mind, Martin, in 10, 20 years, these numbers are going to be significantly higher in difference. So
Yeah.
people remember, but as of today, that's how we classify. It doesn't mean we can't keep something that's 11 or 12 billion in market cap, but the most holdings should be between half to 10 billion. That's kind of the range. And also the historically the larger fund, the larger cap product went down as low as sort of 10, 8, 12 sometimes, but this is where we kind of stop, partially because of liquidity, like Thomas says, but also partially because as you get smaller, a lot of these companies are not as well established, not as well structured, and so it was a little more risky for us to go on the large. But the small product is a different product, and those would be perfectly suitable for such a product.
How do you guys assess the risk and growth potential of specific global small cap stocks? Is it any different from like a better approach, or do you go a bottom up approach, or what's?
Yeah. So when we're analyzing the businesses, our philosophy and our process remains the exact same, where we have our deep rigor in looking and analyzing these companies. So that hasn't changed. What I would say is when you're looking at smaller cap companies, the emphasis on the management and the execution within the company does have a little bit more of an importance versus if you're looking at a mega large cap. Often a lot of it could be the industry size and the structure, and that could play a larger weight within the analysis. Also, we kind of already touched on this, but the smaller companies have a little bit more concentration in terms of which geography they're in and which end markets that they serve. So in terms of how we deal with that, it could be on the size of the weight that we have within the position. So we might have more names within the small cap fund, but you still have that exposure to these high quality businesses, but they could be more focused.
How do you guys compare to other small cap mandates out there? And what type of characteristic of your own management could bring value that, would have advisors choose your fund over another one?
Well, I would say the formula that we've come up with is that we have the same investment philosophy and process. So we try and understand our companies better than anybody else, and we built the product in a way where we can maximize understanding these companies as best as we can. So it's a more concentrated product than some other small cap managers you might find out there with 100, 150 positions out there. So our product is going to be in the range of anywhere between 40 to 60 positions. So we'll be able to focus on these deeper and have a better knowledge base. And at the same time, we're looking to own these businesses for a longer period of time. So our turnovers, I mean, the track record has just started, but the anticipation is that it's going to be much lower than what you see on most products out there. And then maybe the last point I would highlight is we're very sensitive to capital allocation and the profitability of the business and the strength and quality of the business. So you would expect to see our product having very high operating margins, high return on capital, and most importantly, the stability of those numbers. We're very sensitive to businesses that are able to sustain those high levels of returns over um, a business cycle.
Okay, so I guess beside owning a few more names, I guess the strategy or the process will be fairly similar to what you do with the large cap mandates, right?
Correct.
Yeah. Okay, let's switch gears a little bit. Your team is really proud of your active ownership. So what does it mean for this strategy?
So um, one thing that we always said on the large cap product, and this is something that Nadim, highlights to the team consistently, almost religiously, is that when you have best of breed companies, it leads to best of breed corporate governance and best of breed capital allocation. And that's something that we wish to strive to make sure we have on the small cap side. One nuance with the small cap companies is that often these are smaller businesses that are growing quite well, and in certain areas of the business, they're not maturing as fast. And one of those areas could be within corporate governance or compensation. So, coming from our background on the large cap space, we could use this as an opportunity to help communicate what we believe is best in class corporate governance, and then have conversations with these companies to make sure that they're moving in the right direction. And we're not looking to be, aggressive and be advocates for doing this. That's not what we're doing. It's more just helping as these companies grow. We communicate with them what we think is best practice, and generally they're open to the feedback because they also want to be, a best in class business as they get bigger. So that's something that we feel we can bring that's pretty unique coming from our experience on the large cap side.
Before I let you go, guys, you have to tell me a few of the names you have under investment right now. Just give us a few examples of what you're looking for in the space and describe how they fit in the mandate in terms of, I don't know, diversification or positioning.
Sure. So we can talk about two, and one, you could see how there's an advantage that we've been doing a lot of research on the large cap side. So We can look at it a little bit as the little brother of a holding that we have in the large cap space, and it's something that we've known for quite some time. And the position is Wyndham Hotels. So they're a franchise, 100% pure franchise operator of hotels. You probably know the Wyndham brand, but they also own several others like La Quinta and Travelodge. And we know the hotel space very well through our existing holdings in the large cap space. And it's something we're very comfortable with. And essentially, it's a business that's predicated on global travel, high brand awareness, where we think Wyndham can do very well for a long period of time as they grow domestically and internationally. So they have high margins, high return on capital, and they're winning business on a global level. Then on the other side, something that we don't have in the large cap space, but it's unique to the small cap, is another business called Amplifon, which is you might or might not know, but they're the largest hearing aid clinic globally. They have a low teen share of all hearing aid clinics around the world, and in some markets, like in Italy and Spain, they're 30-40% of the market. And here, the idea is that with aging population and um, increasingly retired folks want to live an active lifestyle. They want to be hearing better, and there's going to be more and more demand for hearing aid products. And this company has a fantastic track record of growing organically within their own brands and acquiring independent mom and pops, which make 50% of the market. So they have a great track record of growing margins and revenue over the last decade.
All right, guys, this is all the time that we had. Thank you very much. You've been very generous with your time already. Thank you for your participation. Everyone listening, thank you for tuning into this NBI podcast series, and we'll talk again pretty soon. Thank you.
Thank you, Martin. Thank you, everybody.
Thank
Bye-bye.
you.